Most of us love seeing plummeting gas prices when we go to fill up our cars, but in a state like ours, where about 1/3 of our revenues comes from oil and gas, those plummeting prices can mean less money for things like education and infrastructure. Now, back in August, state economists were counting on oil prices of about $95 a barrel, which could have brought in as much as $285 million more to the budget, but now some legislators are saying that it could drop by $100 million. The oil patch has also been one bright spot here in our otherwise dismal jobs picture. However, some economists, and this is important, speculate this is only a temporary drop in price. We'll see. Joining me to talk about this and other timely news topics of the week is attorney Sophie Martin. She is editor of DukeCityFix.com. Also here at the table is Daniel Foley, former House Minority Whip. And we welcome back Stephen Spitz of New Mexico People, Places and Ideas and KUNM. Also joining us again is Stephanie Maez from the Center for Civic Policy. You got to work it. Now, Dan?
I left one up. I had to
Yeah, that's right. Here you go. Simple question here, Dan, to start. You've talked about this at this table many times, our lack of diversity in our economy. Is this the great wake-up call? Because $100 million less to work with has got to get some attention.
I think there's two things to talk about, Gene. First one is we have to get in the government finance, we have to get truth in forecasting. You know, we've spent my entire career that I was in the legislature, and I think even since, we just pick a number out of the air, we think oil and gas is going to be this, and we build a budget around what we think it's going to be. Then we make the corrections later on. In my opinion, it's always been a very aggressive number. I think it's time that we step that number back and say, as time rolls on, when the cash comes in, let's figure out how to spend it if we need to. But clearly, we don't want to turn our back on the extractive industries. I mean, they're in our state constitution. It's something that the state's been built on. But I think it's time that we start looking at, I was just up in Boulder. We've talked about this at the table. The amount of the businesses that are growing in Boulder. And, I was reading about them, and they've got a policy in Boulder that once your business hits 500 employees, you got to leave Boulder. It's an incubator. They want to bring in, they want you to grow. Once you go to a certain size, they want you out. Why don't we start reaching out to Albuquerque? That's what I'm saying. Why don't we reach out to them and say, okay, we want you to come from 501 to 1,000.
That's right.
Once you're 1,001, get out of Albuquerque.
That's not bad.
And, but we've got to start figuring out a way to diversify this economy, keeping our kids at home. I mean, the amount of kids that are leaving this state that are getting educated on the lottery scholarship and leaving to go work somewhere else is destroying New Mexico.
Might be a requirement there, too. Dan makes a good point, Stephanie, I want to get back to. That is this idea of forecasting. I said it in the setup here. Folks, their fiscal year starts next July. You set a number. You really don't know what the marketplace is going to be at that point.
And especially the oil and gas industry. We've seen it's extremely volatile right now, and I think it really speaks to the need for us to really be disciplined and stable forms of revenue. And I think that we saw several years ago a scale back on the corporate income tax, and that was a huge hit to our budget, $210 million revenue loss in FY17. We can't afford that, not right now.
That's right. The politics of this are going to be interesting. We have a new shape and form of our House makeup, certainly. The Senate is still under Democratic control. But there's less money to work with, significantly less money to work with. That's got to have an impact on decision making because we have a lot of needs here.
It is going to have an impact on decision making. And one of the first things that we've heard from Republican leadership is that we should not expect additional tax reform in this next legislative session, that we shouldn't anticipate tax cuts. That doesn't mean I don't think that proposals won't be floated, but I don't believe that that's going to be a major push in this year's legislature. One of the things that's really interesting to me about the oil and gas situation that we're experiencing right now, there are a number of pressures that are driving down oil and gas prices, and one of them is actually fracking. And as we see the push to continue fracking throughout the country and here in New Mexico, we have to recognize that opens up revenue, I shouldn't say revenue, that opens up reserves, that opens up amounts of oil that do then push down our prices. And it may not benefit us as a larger community to create excess capacity.
Sure. Interestingly, as Sophie's point there, Stephen, that the theory was as domestic stuff rose, we have less reliance on the Saudis, less reliance on overseas things. But we are, in fact, being gamed by folks overseas, by OPEC, with their low prices. They're in a competitive situation with our shale oil that Sophie's mentioning here. It works out for consumers, but this seems like not a good end game could happen here with this.
I'm certainly not an international oil expert, but the Saudis have continued to pump oil, I think at 9.7 billion barrels a year. That's a lot.
Right.
The question is why? Because demand has been going down. The United States actually is the only developed country that's been doing really, really well, something you'd have never discovered in the election. Europe is down. Japan is back into a recession, so demand is down. India is down. So yeah, the question is, why are the Saudis doing this? And supposedly the theory is that they're trying to harm Iran.
Right.
Because Iran's supporting Assad in Syria. They know what the break-even point for Iran is in terms of money, and so they're trying to harm Iran. Now, how long will they continue that? Is that really what they're doing? And I guess the other thing is demand could well increase. I mean, people are predicting demand to go up. That would drive oil prices back up.
Interesting.
Well, an inaction by this administration to place tariffs when they're playing that kind of game is really gaming the system against us as well. I mean, when they're dumping the amount of oils they're overproducing what they've agreed to as an OPEC nation. They're throwing more oil out on the market, and we're standing back and not putting tariffs on that stuff, saying, wait a minute, if you're going to do that, and if you're going to import that stuff, we're going to charge you for that. We're letting that stuff hit the markets, and that's also the big, I think,
It's
big
a free
reason.
market, Dan.
But that's also the reason why you're seeing, well, but it's not a free market, it's a controlled market. But that's a good try. But what we're trying to do is we're trying to get that, you're seeing the Keystone Pipeline. The thought is, and we'll see, is that we can start shipping that X capacity up to Canada, and maybe that'll generate revenue. We don't know, and I don't know how long it's going to take for that to happen. But there has to be some action on the tariffs when OPEC is doing what they've said
Our
they're not going
complaint
to
about
do.
tariffs is that they've been raising the price, not that they've been lowering. I mean, our traditional concern is that the OPEC nations have been raising the price of oil to us. When they lower the price, presumably that's good for our economy. That's not something that
They're
traditionally we've
dumping oil
complained
into the
about.
market is what I'm talking about.
Yeah.
So,
not the
Gene, I
pricing.
think actually this international policy conversation is extremely important and extremely fascinating. But to take it back to state level New Mexico implications, I think this fact right here, and you mentioned time frame. If it gets to $70 a barrel for the next 6 months, then we really need to be concerned. But I think to my broader point about us not just solely relying on oil and gas revenues, I think it also speaks to the need for more transparency in our existing state budget. Tim Keller has been sponsoring year after year the tax expenditure budget. I mean, we need to be really taking a strong look at what expenditures we're providing to larger corporations who are coming here, and whether or not those tax breaks are actually providing what we want them to provide, which is long-term, sustainable, good-paying jobs. So I think, the governor needs to sign a tax expenditure budget, and we need to figure out how to really be disciplined.
Sophie, on another point with the legislature, there's one item I'm very curious about. There's like dominoes falling over here with these prices. What happens to hold harmless for counties and municipalities here in the discussion in our legislature? Do we now say, okay, we need their money now more than ever, or is it's the wrong time to be touching up counties and municipalities since we're going to have lower revenues?
So the counties and municipalities have made it very clear over a number of years that they are starved for revenues, that they cannot cover, in many cases, the very basic requirements for a city or a county, and that they cannot afford to lose more. They're deeply concerned, of course, about the change that's coming, or the change that we see in terms of hold harmless. But beyond that, we can't just continue to view every part of government as a potential piggy bank without looking at where can we raise revenues that perhaps are less popular, but corporate taxes and unfortunately probably personal income taxes. Now, one other thing I wanted to mention,
Please.
not to take us totally back to the global thing, but one thing that I feel some concern about as oil and gas prices continue to drop is there may be less urgency or less pressure to invest in non-extractive energy production.
Gotcha.
We, in some ways, our solar industry, our wind industry have benefited when oil and gas costs have been high. And here we are in a place where, I have to believe, we know oil and gas competes with renewables. The increasing pressure downward of those prices, I have to believe part of the consideration is we don't want to see that investment in renewables.
That's an interesting point. Interesting. We might come back to that at some point at this table. That's very interesting. Also, Stephen Spitz, another idea is the Land Grant Permanent Fund. And the idea that if there's less money coming in, does this in effect kill the idea about more money for early childhood education for this legislative session? Is it just,
supports it.
you know, well, there you go.
Sorry,
There you go. That's quite all right.
Well, I think the original prediction was, I think, about $650 million coming in.
Right.
So if it's, you know, the percentage decrease isn't that significant.
Right.
There would still be enough, you know, there would still be enough money coming into the fund, so you could support all the beneficiaries of the land grant permanent fund, plus 1% to early childhood, and there wouldn't be any net negative to the land grant permanent fund. It would continue to increase with its own financial assets at about 7 to 8% per year. So there's simply I don't think that there's in my view, a good argument against it.
Is there a counter argument?
Well, yeah, I think the counter argument is that we got, you know, and Gene, you and I joke about this all the time talking here. We have to prioritize. So we sit here today and we say, do we want to use that 1% for early childhood spending to increase early childhood development and education? Okay, but then 2 minutes later we want to pay teachers more, then we want to grow this, we want to expand that, we want to change this, and there's only an infinite amount of dollars. And so, you know, I appreciate us talking about finding out what we do for businesses when we give them a tax cut. I don't think anybody's opposed to making sure that they're bringing the jobs they say they're going to bring, but I think this whole thing starts off with truth and forecasting. We are setting budgets based on crazy math science because somebody decides that we're going to say oil's going to be $85 a barrel and we'll be trading MCF at $7 an MCF, and away we go. And we find out in July, halfway through the legislative session, after the legislative session's over, well, it's not really there, and we start trying to change all that
budgeting
stuff.
is predictive. I mean, there's only so much that you can do.
Historically, we're way bad, though. We're way bad. I mean, I'm telling you, we've been predicting on, you know, we're saying oil's going to be $100 and it winds up being $70. That's the key.
That's it. There you go. In a moment, we're back with a segment about the challenges faced by women veterans.